Hi, this is Adam Hewison. I'm coming to you from the digital studios of MarketClub, and it's good to be back in America from down under in Australia and New Zealand, where I was there for my daughter's wedding and a few other things related to business. But I'm looking at the markets, and on the screen we have a chart of the Dow. And while this is not obviously a broad indication of the markets, the other markets, the NASDAQ and the S&P 500 are behaving very similar to this. A couple of things I want to show you. We've had our Fibonacci lines in place right here. You can see the retracement levels from the lows that were taken in March. We've come up to this. We've talked about this before, what we call this thin air. Once you get into the 50 to 61.8% on a retracement level, and this is a retracement level, you get into thin air, meaning the market's going to have a very, very difficult time moving higher from this level, in my opinion. Just looking at our trade triangles, you've got a score of -70, which is not a positive score by any means. The only thing holding this up for the moment is our monthly trade triangle, which is still long from 8,315, which is right here. Markets have come up, and I want to show you something in Japanese candlestick charting that you may already know, but I want to share this with you again. So I want to take everything off the screen, and I'm going to take our Fibonacci lines off. You've seen me do this before. It's very simple to do. If you have any trouble with Fibonacci or learning how to do it, just give our tech support team a call, and they'll be happy to walk you through it. So let's just take this off the screen. We'll take our trade triangles off the screen. We'll just make everything as simple as possible, and we'll just look at what's going on right now. And what's going on right now, in my opinion, is something that's pretty negative in Japanese candlestick terms. If we look at these last couple of months, so this month right here is January, which we're in right now, January 2010. This is December of 09. So as you can see, this particular month is engulfing the previous month, which means the red. Let me scope this in further, because I want to see this very, very closely. And I'm just going to do that with our little magnifying glass. You can see pretty closely how it works. But you can see that we've engulfed this line here, and that indicates that we're going to see further erosion should the market close lower in February. Now, in regards to our trade triangles will get negative if this market goes below the low right here, and that low is 9,678.95. That is going to be a key level to watch for in February. If we go below that level in February, then this trend, which began with our trade triangles back here, is going to go negative, and we would want to be short the Dow. My gut feeling is we're going to see a pullback, and it's going to be quite severe. And if we put our Fibonacci numbers on here again, if we assume a couple of things, and that's right now it is an assumption. So let me take that off, and we'll put our Fibonacci numbers on here. I have to scope this out a little further. It's very easy to do in MarketClub. It gives you some retracement levels that we are going to be watching very, very closely. And as we mentioned, we're looking for this market to potentially go down to find support right around this level here, which is the first level on the Fib retracement, 9712.38. If we go through this level, then we're looking at potential going all the way back to 8,000, which I think is going to make a lot of people very nervous. So be aware and be prepared to look to exit this market or potentially be short this market. Currently, we are out of this market based on our trend triangles. We've talked about this before in an earlier video on the S&P 500. Our weeklies are obviously short, or I should say not short, they're out of the market, saying just be on the sidelines and let's see how this market plays out. So again, very, very important levels. We're going to have a very interesting year, lots of opportunities to make money, but it's only going to go to the people who are prepared to move quickly in the markets. So Adam Hewison, good to be back. Hope you enjoy this very short video on the Dow, and we'll be coming back to you with more videos.